everyone. Good morning. Welcome to informative session on Union Budget 2023. My name is Swati Sinha and I am associated with Sailotech. Sailotech is ASP application service provider and have a solutions for e-invoicing and GST filing for Indian localization. So we are organizing this event in collaboration with Darda Advisors and as a knowledge partner. So India Budget 2023 is being presented at a time when the major advanced economies, we are not live. Mm-mm. Let me check mine.
I think we are live. I can see the live option there.
Yeah, that is here. Getting the message for the same. Let me check here. Yes, we are live now. Hello everyone. Welcome to informative session on Union Budget. Uh, my name is Swati and I am associated with Sailotech. Sailotech is basically an application service provider and we have solutions for e-invoicing and GST filing for Indian localization. So we are organizing this event in collaboration with Darda Advisors as a knowledge partner. So Finance Minister Nirmala Sitharaman has already announced a number of changes in the income tax slab in the new tax right. So this is the first budget of Amrit Kal, what the Finance Minister started the presentation yesterday. So the world has already recognized Indian economy as a bright spot, and India growth at 7% in current fiscal is highest among the major economies. So what surprises does the union budget have for you, and how does it going to affect your sector or industry or individually? To comprehend the effects of the announcement, we have our expert panel with us, Mr. Vineet Suman Darda and Pankaj Sancheti with us from our knowledge partner Darda Advisors. So, Vineet will give us insights on economic survey and indirect tax proposals, while we have Pankaj Sancheti with us to give a brief on direct tax proposals. And of course, at the end of the session, we will have the Q&A session. Whatever the questions you have, please give us that in the comments. So, over to you, Pankaj. We can start with the presentation.
Yeah, Swati, first we will have the session on this economic survey and IDT, and then we will take on the direct tax.
Sure,
We'll
sure.
start first. Good morning, everyone. I am Vineet. I am part of Data Advice LLP. We are a tax and consulting services firm. And today we are going to discuss on key insights which happened in the yesterday's budget session from a direct tax and indirect tax perspective. I will take you from the indirect tax key aspects which are changes, and then my colleague Pankaj will take you insights from a direct tax and corporate tax perspective. Before even we proceed to understand what all changes happened, we would like to brief you into today's first yesterday session. Indirect tax key proposals were discussed first, and then direct tax because they want to give the big bonanza to all the individuals. And first thing is there's no negative surprises in the budget. What mentioned by Swati, it's the first budget in the Amrit Kal, and expectation was high from the industry. It looking to the current situation where the Russia Ukraine have the war, COVID situation is still rising in the neighboring country China, and also all federal banks are increasing the rates looking to inflation. In all the situation, still if India is growing at 6.9 or 7%, and the future also the way it will grow at 6.8. Yes, we are a bright spot and looking forward to see how the way we use our complete call of 25 years to reach as a developed country. If you see in the economic survey, they have discussed about each and every aspect, how the way India is doing, being a fifth largest economy, GDP growing at 7%. We have the highest forex reserves compared to neighbor countries and other part. We are the biggest insurance market. We are looking to grow the same rate in next year. The way the government has controlled the fiscal deficit 5.9 and would like to continue the same in future, that also has been discussed in deliberate. The point is the way the government is bringing the PLI schemes for various sectors, the way India is growing for electronic sector and ESDM, even if you see renewable energy, the way we are achieving our targets. And by 2070, we want zero carbon credit. All the way, the economic survey has given the good insights to a first budget in the Amrit Kaal. You can see on the screen all the numbers. I think maybe Pankaj will be the right person when he discusses about the corporate tax. But yes, all these numbers reflect how the way Indian economy is growing, which tax is giving the more contribution to the exchequer, how the way we see the people are moving. Now today, currently we have a 55 plus crore registered PAN people registered. 5.83 crore plus we have income tax returns being filed till last year. And if you see from GST perspective, we have more than 1.41 crore registered taxpayer. And the January collection was second highest ever in the history of GST, around 1.55 lakh crores. It gives the indication that yes, the way the government is bringing changes, they are positive that the business grows more and so economy. Now I come to the core area, which we are going to discuss from indirect tax perspective. In the last year, only two meetings happened from a GST Council, 47th and 48th, and major changes, including clarification provided. And in the budget, they have given the glimpse of key aspects of the budget from a GST. They made certain changes in the customs. Even the duty rates have been changed to just rationalize apart from the textile and agriculture products. So they want to promote the manufacturing, make in India, and value addition. On this core three parts, all the rate change have been done. And even they've seen how to reduce the IDS structure, inverted duty structure. So accordingly, the rates have been changed. We are going to discuss key changes in detail from a GST and customs in next slides. And if you ask me what all expectation which were there from this budget, being a first budget of Amrit Kaal, did not meet the expectation. First, I will say from last 5.5 years, they are still waiting for a GST appellate tribunal. We are entering into the end of sixth year, but still the proper tribunal is not there. And for every matter after commissioner appeal, we need to go to High Court. And we all know all Supreme Courts and High Courts are stuck with number of cases. It's very immediate requirement that GST tribunal is set up so that all the cases are resolved maximum at appellate level. As you see, after 2A, then 2B came, so many provision changes in the input tax credit for claiming it. People are getting notices, assessment, and even the government is telling like 17, 18, 18, 19, and now even High Court 12 for 19, 20. You just give CA certificate where you're not able to match with the 2A. So you can see a situation where the more time of business people are going to ensure that the right credit is claimed subject to a vendor has paid a tax or filed the return. Being the complete returns did not come into picture, that's why the current situation is there. All were expecting that amnesty scheme like came into erstwhile law in 2019 should come for GST also, for initially at least for 3 years, because lots of people have delay in filing returns or gap in filing returns due to so much confusion and due to even the system issue. That also was expectation for this part. Even they did not announce any announcement on the valuation and tax part, and also on the simplification of the regime. It also was expectation this budget. So now move to the each and every aspect of this one. So first thing, maybe it's not a good news for the industry. As we all know, a corporate social responsibility, it's now a mandatory under Companies Act under Section 135. Based on your net worth, based on your profit, based on your turnover, you need to do in last 3 years on that you need to do a CSR activity. And people were doing it, are still doing it. And up to till now, till this budget is Finance Act is notified, till now people are claiming credit on whatever goods and services given as a part of CSR because being a in furtherance course of business. But now they specifically excluded in section 16.2 that any goods or services of both incurred for the purpose of CSR activities is not eligible for credit. So you have impact on income tax, which may Pankaj may give in highlight during the session. Even 100 rupees increase CSR have the deduction or not. And now 18 rupees or a 28, whatever GST you are going to pay, that is also going to be a cost to the company. One more point came here is CSR have one particular limit of 2% of net profit. The question comes, if I am doing beyond 2%, can I take credit? Because law specifically says only related to your obligation under the Companies Act for CSR. If I'm doing beyond my obligation, the government has to clarify on this point. Second change which happened is they expanded the concept of exempted service to include your any goods which you have sold or supplied before clearance from home consumption from a warehouse. It may be a private bonded warehouse, it may be a public bonded warehouse. It means you need to do a formula calculation by including that amount also in the definition. So another change which happened is they are aligning the ITC provision with return filing system. Changes happened in the last year. So they made all these changes so that ITC provisions, returns provision are now in single go. If you see earlier, 1, 2, 3 and other system were there, but 3B was not there. So now they made some changes in the returns format. So accordingly, how to claim a credit as per 2A, 2B, and what are restriction if you are claiming how to reverse it, they made changes in this provision. Other major change which happened in ITC is on the your provisional credit become a self-assessment credit. So last year in the October, they notified the provision which say now concept of provisional credit is no more there. Whatever you self-assess, you take the credit. So accordingly, they made changes in the other provision in section 54 to say that now provisional accepted concept is no more there. So if you see in the July 17 onwards, there was a big issue on what happened. I cleared the goods before home consumption at port or at warehouse, or I do the transfer of document title when the goods are at the origin country of origin, like India nautical miles area. So there was a dicey situation ki how the transaction will be taxable or not. So in that case, some people have paid taxes, some people have not. So whoever paid, now they stuck after the situation because this changes happened from 1st January 19, but now they made it retrospectively from 1st July 17. So any transaction of supply of warehouse goods to any person before clearance for home consumption, anything like a high sea sale when you transfer document title, you do it, or any sale of goods from one non-taxable territory to another, like from Bangladesh to Afghanistan, and the supplier sitting in India, is all three are not taxable retrospectively from July 17. And in case you have paid the taxes, you will not be eligible for refunds. So There are two situations. Whoever paid taxes, like in conservative view, it's a cost for them. Whoever has not, they are in a good stage where because now a retrospective amendment has been done. Another big important change which happened is on OIDAR services, online information and data access or retrieval services. This concept has been replicated from a service tax law, and all the litigations which were in service tax were also happening in the GST. Even you can see the number of advanced ruling too. And mainly was on the minimal human intervention and automated. These two words have always given the deliberation litigation in both law. And second, coverage. The definition of a non-taxable online recipient, in brief, it's an NTOR, now has been completely changed. So earlier it was restricted to any business, commerce use, including the government. Now they covered each and every person who is sitting in India as a recipient, whether for a business or not, it will be a NTOR. And by changing the definition of OIDAR, by removing this essentially automated and involving minimum human intervention, so any litigation on that aspect will be reduced and the scope will be expanded. Any person who is a unregistered service provider sitting outside India, providing services to non-taxable online recipient, has to pay taxes on all such activities. Now, only one point which may still be in dicey, whether government can say, ki yes, still you are liable to RCM. In that situation, there may be dual tax where the service provider is paying the tax to government, and even then, a recipient has to pay under RCM. That should also be clarified by the government. So this budget, they've concentrated so much on e-commerce operator. I see on OIDAR, on the penalty provisions, on supplier through e-commerce operator, they're given so much relaxation. So now they are putting onus on e-commerce operator to give complete data in their returns or to a transaction properly. So three types of transaction, if they are doing incorrect or not up to the based on factual data, then they have to pay a penalty of INR 10,000 rupees per transaction or equal to tax, whichever is higher. So what are transactions? If you're allowing a supply of goods services to an unregistered person other than an exempted category, then you are liable for that. You're allowing any interstate supply by a person who is not allowed to make interstate supply, then liability comes. Or the return, they are filing for TCS under section 52, they are not furnishing correct data. In all the situation, now onus and liability comes on e-commerce operator. Even government understanding the way the hybrid model, the way even the online is moving, they want to put complete onus on e-commerce operator. There's an additional compliance for e-commerce operators so that you can see tomorrow they need to ensure that any supplier who is doing, they are cross-checking on all these aspects. Otherwise, if any such transaction happen, onus on them and liability on them. In last GST Council, they have discussed so much about the compounding of offences, decriminalization, or how to increase the monetary limit. Now, finally, in this budget, they have done it, and they have specified certain transaction which will not be come into criminal category. When it comes to criminal category, the government have power to prosecute and also issue a warrant or put in jail. So what are all these which they have removed? One is if you are obstructing or preventing any officer for discharging of duty, Now, no more criminal part. You are tampering or destroying any material evidence, or have failed to supply any information which required by the officer. In all these three cases, liability of criminalization is no more there. But please note, in case it involves the issue of supply of goods without invoice, or issue of invoice without supply of goods, which provision came 3 years back in the 2021 budget. If that is happening, then it will be applicable and criminalized will be there. Otherwise, not. Second, they have a monetary limit for a prosecutions. So earlier limit was around INR 10 million. Now they increased to 20 million, which is around 2 crores. It's a good indication that government is trusting the taxpayer, and wherever required, only they will launch a prosecution or put an issue as a criminal part. Otherwise, not. Even on compounding, they have determined what all things can be compounded, and they given relax and also increase the amount. Earlier it was 50%, now it made it 150%. It's also a good indication from the government along with the increase of monetary limit and decriminalization. So this one is a very interesting change happened in the law, giving so much right to the government to access your data. Obviously, if you see GST, income tax, customs, and MCA portal are interconnected. Now, additionally, they were asking they can share your data of returns, your suppliers, your registration detail, your PAN, your number, email ID with your consent. Now you know how the way consent happens during the portal operation. Sometimes you need to file it and they mandatory ask you to consent with that, or separately a consent letter comes to you. But once you provide a consent, they have a infinite right to share your data with any other source. Further, now if you see there is change in the provision, especially for the where you don't need a registration. So they have made changes to give more power to the government authority to decide where, which transaction, which person should not have the registration. So one more restriction now on the taxpayer. Your GST one, 3B, your TDS returns, your annual return, you can file with delayed return only up to 3 years. Beyond 3 years, you cannot file your returns. So this provision will have impact. The people were non-compliant. Now they want to do compliance for all the relevance year where they were liable to register or liable to file the returns. So now beyond 3 years, if you are not able to do it, obviously there will be adjudication authority will put their own assessment and penalty implication on that. So this provision of refund is purely for the comfort of government. Today, if I apply for a refund, government has to give it back within 60 days. If they're not giving within 60 days, they will pay you interest. Now they put it, they will decide in which formula, how to do it, and they will compute, then they will give. So the automation concept of getting a refund, interest on refund is no more there. It will be decided by the government under separate notification with condition when they will give, when they will not give, when there is a fault from the government side, where there is a fault from the officer side, then only interest will come. Indirectly, they are putting them in the self-interest. Yes, we will pay only once some conditions are fulfilled, otherwise not. Another benefit for e-commerce operator suppliers, Earlier, supplier of goods to e-commerce operator cannot go for a composition levy scheme. But after this change, they can go and have this composition scheme. A big relief. You can see total 4 relief have been given. First is e-commerce operator. They can go for a supplier can go for a composition levy scheme. No need for a compulsory registration. Penalty on e-commerce operator for any non-compliance or not sharing data properly, and expansion and clarification on definition of 𝑒𝐩𝐿𝙚 services also, which is more relevant for gaming and other industry. But as part of e-commerce operator, one more benefit has been given. So in the IGST Act, they made one small change, specifically on the place of supply, transportation of goods by any mode, including mail or courier. So there is one specific proviso in subsection 8, which says that the place of supply, irrespective of destination of goods, in cases where the supplier of service and recipient are located in India, that has been removed. So it means whatever POS will be decided based on each and every terminology given in the relevant section. Proviso has been removed now. Now I come to the customs. On GST, we discuss all relevant changes which happened in this budget, mainly from a registration, returns, input tax credit, penalty, prosecution, and refund. Now, if you ask about customs, they have made number of changes in Customs Act, in Tariff Act, and obviously, as usual, so many rate change happened. And this time, rate change happened only for 3 reasons: to promote Make in India, to have value addition in India, or to remove a IDS, involuntary structure, or create more value addition. So here they made one small change. Last year, one specific provision came, is all exemption notification will have validity of 2 years. So it has created confusion. Now everyone has to count 2 years for notification, and then accordingly has to apply for it. Now India has multiple free trade agreements with number of countries like Asia, Thailand, Vietnam, and it's are for more than 2 year, 5 year, 10 year, or no period decided. And notifications are already issued or going to be issued. Now, question came how this notification should be looked into it, because again, government has to issue no notification, or can I follow the notification irrespective of 2 years expired? The government is clarified, not clarified. I will say put specifically in the notification. Any exemption notification in relation to multilateral, bilateral FTA, obligation under international agreement, treaties, convention, UN agencies, diplomats, international organization, privilege of constitutional authorities, scheme under FTP. Please note, even they have covered the foreign trade policy scheme like advanced license, EPCG, DFIA, and others. For any other central government scheme like RoadTap is there, will have a validity of more than 2 years. It's very good news, so that now when anyone is going and claiming benefit on imports from ASEAN or under FTP, no need to worry about that 2 years have been expired for that. If you see from last 2-3 years, settlement commission like in income tax is growing. People are going more to settlement commission to resolve the issue. To ensure that they do the fast track working, now they mandate the day you file application, within 9 months, settlement commission has to dispose the application. So now it's a mandatory to dispose the application within 9 months. It's a good indication that now any long pending cases between the taxpayer and the authorities can go to settlement commission to resolve it. There are changes in Customs Tariff Act. If you see, the relevant section has been changed only to align with the intention, and it is retrospective from 1st January 1985, 23 years back. You can see we love so much on retrospective part that wherever we get the opportunity to rectify or to put a liability, we use that funda. They have made change in the first schedule, second schedule, specifically on certain aspects on rates and also on rationalization on other aspect. So wherever there is increase in tax rate, it will come effect from today's date, and other will come when only the bill is passed. If you remember last year, HS 2022 came, which is a new harmonized system of reading the chapters, section notes, chapter notes that have been came. Now India aligned its tariff based on HS 2022, and it will come effect from a 1st May 2023. So still people have time. Anyone is into the imports and exports as a trader or service provider or manufacturer, they should look into a new tariff along with general rules of interpretation, which is now aligned with HS 2022. One small change happened in the Central Sales Tax 1956. Now they given any advance ruling or any matter pending at ST80, tribunal matters, now will move to SESTAT. You no need to go to estate now. Every document pending at or file pending at the advanced ruling authority or at estate, sales tax appellate tribunal, all will move pan India to SESTAT. It's a good indication so to resolve having the multiple benches which are no more requirement under new law. And if you see from a tax perspective rate change, they have selected particular sectors specifically where the government has a concentration, even where they brought the PLI schemes, other schemes like green mobility, on electronics, on electrical. Even they are bringing the PLI for chemical and petrochemical. For marine products, they have given the reduce of duty on shrimp feed. Now they want to promote lab grown diamonds. So whatever seed which you will import, they have reduced the custom duty, they have reduced the duty on precious metal from gold and platinum. Also, they increased duty on silver, so that silver, gold, platinum are on the same stage. And then the compounded rubber, also they reduce, and cigarettes, they have increased the duty, along with NCCD and all. In brief, from an indirect tax perspective, bad news is no more credit on CSR activities. Good news on the compounding of offences, increasing the monetary limit for prosecution. Sad news for e-commerce operator to comply for three aspects. If they are not complying, they have to pay penalty. Good news for supplier to the vendor, no need to register if you are supplying goods through e-commerce operator. Or you can go for a compulsory levy scheme. In customs, they made changes in settlement commission and other part. In tariff, they are now aligned with the HS 2022, which is effective from 1st May 2023. Now, SESTAT is going to be a main authority for all advanced ruling matters and estate matters in CST Act. These are changes. We can take all Q&A after a session by Pankaj and along with DT provisions. Maybe over to you, Pankaj.
Good morning to everyone.
Pankaj, you can share your screen now.
Yeah,
you can share the screen, please.
Is the screen visible, Vineet? Can you just confirm?
Yeah, it's visible now.
Okay, great. So good morning, everyone, and thanks to Sailotech for having me here on this to speak about the direct tax proposals in the union budget. And Vineet has already spoken about the economic survey, the highlights of the economy. So I won't be spending much time on it. And given the limited time, I will directly jump into the direct tax proposals. just few points which I found quite interesting, and which gives us a lot of hope about this period that is being called the Amrit Kal, and our journey to be a developed country. So a lot of good signs, and I truly hope that we work on this good signs and make India a developed country a reality. So a large economy, I mean, fifth largest economy and growing at a 6.5% growth is a really good, uh, is a really good growth, particularly in this global environment where a lot of countries are facing challenges. So other important aspect is on the capital expenditure led growth. So there has been huge increase in amount of capex which the government is doing. So it is not just revenue expenditure or subsidies or freebies the government is spending on, and there is a lot of capital expenditure that is being spent. And I truly believe that much more can be done on the capex side. The government has budgeted 10 lakh crores to be spent on the capital expenditure, which is good. Um, so moving ahead on the direct tax proposals. So just to give you an idea, there have been 122 amendments. Obviously, the finance minister, honorable finance minister, has spoken about the highlights of the amendments. But just to give a number reference, there have been 122 amendments. And in my view, are the amendments, I mean, because the expectations were high, because there was so much impetus given, I mean, expectation generated by the government itself that this is the Amrit Kal, the whole world is looking at India and other aspects. So the expectations and the top three expectations from the budget, we will see whether they have been taken care or not. But the top three expectations, the pre-budget, were to list it, were reforms on the capital gains tax and TDS. There are multiple taxes, tax rates in the capital gains, different methodologies to compute capital gains. For different persons, it is different rates. So there's too much of confusion on capital gains and TDS. So that was the number one expectations or number one ask of the industry, um, was on capital gains and TDS reforms. Second was the simplification. Their procedures are getting complicated, though it is all online now. They are still if the income tax form itself has to be looked at it. Some of the forms are like 80 pages. So there was a lot of hope and expectations that it will get simplified. Obviously, it cannot be done through the Finance Act. It has to be done to the uh, rules and other forms that will CBDT will notify. But that was also an ask of the industry that it has to be simple tax provision. The third ask of the industry was to relook at certain of the exemption limits, because a lot of limits which have been set for deductions, exemptions have been set long time ago. I mean, just to give an example, there is this children education allowance of rupees 100, which is there exempt under the Income Tax Act. I mean, in today's world, there is nothing which comes in rupees 100. Similarly, for a minor, if he has an income, then there is an exemption of 1500 rupees. I mean, it's like said this 1500 rupees has been set up like something like 25 years, 30 years back. So those limits are still there under the act. So there was an ask by the industry and also from the individuals that these exemption limits have to be relooked at. Now let's go ahead and see what really has happened in the budget. Uh, Personal income tax. The Honorable Finance Minister left personal income tax to be said at the last, but we will start with it because that's what we all look forward to. So there have been changes in the new tax regime. No changes in the old tax regime. So a lot of lot of euphoria that tax rebate has been extended to 11 lakhs and all those things may not be savings for most of us, because most of us will still continue to be filing tax returns under the old regime, because that would be more beneficial, uh, as we claim ATC deduction, as we claim ATD deduction, and we also have housing loan interest deductions, HRA. So if some of these provisions are claimed, then the old regime continues to be beneficial. So I think this is a cosmetic change. Um, but what basically the the government has hinted that the new tax regime is going to be the default regime. So maybe in the near future, the old tax regime may not be there at all. As of today, you have an option. If you are a salaried taxpayer, then you have an option of shifting from one to other. Every year you can make a choice. But if you are having income from business, then you don't have much options. You have to decide, and then that will continue to be for your next 5 years. So the new tax regime to be the default regime unless the SSE opts out. Income tax rebate limit increased to 5 lakhs to 7 lakhs. So important to note, all changes are in the new tax regime. Leave encashment limit for private sector employees extended from 3 lakhs to 25 lakhs. Standard deduction and deduction for family pension should be provided under the new tax regime. So which is a good thing. Earlier they did not provide this 50,000 deduction also. And most important, peak tax rate of surcharge reduced from 37 to 25%. This again is a good move because with the peak tax surcharge rate, the tax at the highest slab was for individuals was 43%. And if you compare with this tax rate with what companies are paying or what other business entities are paying, it was significantly high. So 25% also is high, but yeah, at least some relief is there. From 37 to 25%, it has been reduced. So the effective tax rate for the highest slab taxpayers, that is who are having more than 5 crore, which is reduced to now 39% from the earlier approximately 43%. Now let's look at what are the other key amendments. As I said, there are 122 amendments. It will be very difficult to go through all of them in the short period we have. So we will focus on the key ones. I will briefly touch upon most of the amendments, but we will not be able to go in depth. And then if they have some specific questions, please feel to type your questions, and then we will take it up at the end. One important change has been on the deduction on the capital gains investment on residential house. This was not mentioned in the budget speech as such, but the fine print says that the deduction on capital gains for investment in residential house, which was under 54 and 54, has been capped to rupees 10 crores. I think it is a good move. It will impact very few people because, I mean, even if you take 10 crores limit to get a house in any of the most of the Indian cities, 10 crore, you will be able to get a good house. So something which was being invested in a bigger a house, or basically was not really for house, but for additional facilities, the house would have been provided. Maybe a big house with a small, big campus with a small house, those kind of facilities being taken. So yeah, it's good that I think I welcome this move that it has been capped at 10 crores. Deemed income from provisions of gifts and benefits received extended to non-residents. So earlier it was residents, then covered non-residents. Now not ordinary residents also are being covered. So, so that's one thing. And then interest deduction claimed earlier should not be part of cost of acquisition of immovable property. So there cannot be a double deduction. That's what the amendment means. So when you take a house, you take a deduction for the interest under section 24. But when you sell the house, you will not be allowed the same deduction again, because technically speaking, the interest which was paid can be taken part of cost of acquisition. But now after this amendment, you will not be able to claim a double deduction of the interest which has already been claimed as a deduction. But the interest deduction here is limited to, under the 24 is limited to 2 lakhs. So maybe if that is for people self-occupied property. So if you're paying higher interest, yeah, that higher interest can be tracked and it can be taken as cost of acquisition whenever the house is sold or capital gains are earned. The next amendment important which I felt was on the life insurance policies above 5 lakh premium. So there was this limit which was introduced in 2019 for ULIP policies also, where if the aggregate premium is in more than 2.5 lakhs of a ULIP policy, then those policies were not considered to be tax exempt policies. So then the life insurance companies came with policies which were not called ULIP or which were not linked to market, but under some other provisions they were guaranteed returns. So now those policies will have a cap of 5 crores, 5 lakhs, and if the premium, aggregate premium. So basically, it means by aggregate premium is that you cannot take multiple policies and then pay more than 5 lakhs to get a tax-free return. So for per individual per year, it could be a maximum of 5 lakhs, which you can make to this insurance policy to get a tax-free return. Okay, I think I missed a slide. Yeah, so this is just giving the rates which are there. Just moving ahead. So this again slide gives what is the savings that are what you see under the new tax regime. Someone opting for the new tax regime, what is the savings? Yeah, so there is a maximum saving of, as per my calculation, of 37,500, which is coming for employees who opt for the new scheme and have income up to 15 lakhs. Yeah, this slide just shows that where the old schemes still is beneficial. Under the old scheme, when you claim HRA, when you claim leave travel allowance, when you claim ATC, ATD, ATCCD, if all those deductions are claimed, which I think every taxpayer should claim, because in addition to giving tax benefit, these are important savings options. So if someone claims all these deductions, then yes, the old scheme still is beneficial. A lot of provisions related to rationalization of TDS. As I said, TDS reforms were needed. They have become too complicated for a common businessman or a small businessman to follow and done, but some tinkering has been done. I think all these changes which are there, very few of them are from a taxpayer's perspective, but more are more from the tax collector's perspective. The rationalization has happened. But we'll just quickly go through it. No withholding tax on cash withdrawals by cooperative society up to rupees 3 crores. So there is a TDS kind of thing on cash withdrawals from banks above 1 crore if you withdraw. So now for cooperative societies, the limit is 3 crores. For non-PAN cases, where EPF withdrawals are there, the TDS rate was 30%. Now that has been reduced to 20%, which is the rate for non-PAN cases anyways under 206AA. So yeah, so good one, TDS rate has been reduced. Threshold limit of 10,000, which is for online gaming, that has been omitted. So for online gaming, whatever be the gain that is, or prize money that is given, 30% would have to be deducted. Even for other games of skills, where there was a 10,000 limit, there are also some amendments to show that it is not per transaction, but in aggregate of all transactions. So if someone is having multiple transactions, they have to be clubbed together, and not individual transaction cannot be taken as a limit. Then we have this 194R and 194S, which were introduced. So penal provisions have been extended to those sections also. So it was not clearly covered under the penal provisions when TDS is not done on this thing. So penal provisions have been extended to 194R and 194S also, which are basically the new TDS on perquisites of benefits in kind. Moving ahead, TCS rate on overseas tour packages and foreign remittance under liberalized remittance scheme is increased from 25% to 20%. This is significant. 20% of any overseas expenses would now be deducted at source, and then the payer would have to claim it as claim a refund of it. So this is significant. Maybe the government wants people to discourage people to go for foreign holidays, and then maybe they want them to holiday in India only. So it will be a big jump or increase in budget for people who are planning foreign holidays. withholding tax on payment of certain incomes of mutual funds to non-resident. It's currently 20%, but some treaties may provide for lower rates. So this is under that 196A, where the TDS rate is provided for payments to non-resident also. So now it's said that you can apply a lower treaty rate if DRC is available. So this provision, it's a good move, because then it rationalizes all other TDS provisions to non-residents, because this was a case where a non-resident was supposed to get 20% deducted even if the TRC had, even if the treaty had a lower rate. So good, it's rationalized now with all other payments to non-residents. Enabling TDS credit for income reported in the past. So this is again a mismatch that happens very frequently when you have income from foreign sources and there is a TDS. Also in cases where you have income within India, where you have offered the income to tax, but later you are required to later you are required to claim a credit. So there is a mismatch in the period and the TDS amount. So now there is a provisions, you have to again apply separately for wherever TDS you have got it later, but you have offered the income already to tax. You have to make a special application within 2 years, and then the officer is supposed to give you this TDS credit. So a long mechanism to get it done, but yes, now there is a mechanism to claim the TDS which comes later on and does not come in the same year. 197, which is again certificate for lower deduction, that has been extended to income under 194 LBA, that is income from a business trust. So if you feel that you're not required to pay taxes and TDS is happening, you can apply for a nil or a lower withholding TDS certificate. Moving ahead to MSMEs and cooperatives, section 43B, which is deductions on payments only, that has been allowed now only, that has been extended to 43B. So companies will get deductions only on payment for MSMEs. 44AD, which is a presumptive taxation, that limit has been increased from 2 crores to 3 crores, which is again a good move. But it is subject to that the taxpayer having income only up to 5% from cash. So if it is 95% is from modes other than cash, then you can opt for this presumptive taxation. You don't have to maintain books of accounts, and a presumptive 8% tax can be shared, and so that's a good thing. Similarly, for professionals, the limit has been increased to 75 lakhs. Cooperative societies, the government again wants to promote cooperative societies. So there is this provision under the act which gives a lower rate for new manufacturing companies. So that has been now extended to cooperative societies also. So they will now have to pay only a 15% tax rate, provided they commence manufacture before 31st March 2024. Again, this was a litigation which was happening for sugar cooperatives. Lot of times the price at which the sugar has to be, or the sugar cane has to be bought from the farmers, is fixed by the government, and there is delay in fixing these prices. So when you paid for the past years, there was this litigation that it is a prior period expenses and not allowed. So now the provision has been made in the law, and again the taxpayers will have to make an application when they make this prior period payments and claim it through the returns. Limit for cash loans and deposit by primary agriculture credit societies, that has been increased to 2 lakhs. So cash loans and deposit, the general provision, it is not allowed more than 20,000. So for agriculture credit societies, it has been increased to 2 lakhs. Startups, some of these provisions which we hear in every budget, there is some changes happening, and startups is one area where government has been making changes every year. So the startup which are eligible to claim, eligible for applying for ATIC tax holiday exemptions, they had to be incorporated before 31st March 2023. Now it is again extended to 31st March 2024. I think this is the third time the extension is happening. Maybe the government can have a long-term picture and maybe extend it at one go, but yeah, every year this extension is happening. Relief to startup, again for carry forward loss and setting off losses, also again a very good move, because the startup definition itself, which is there coming from the DPIIT, gives a period of 10 years for the startup. So, and whereas the income tax said that the losses incurred in the 7 years, on the first 7 years, they could have get carry forward without the condition of the shareholding being the same. So now that has been extended to 10 years. So it makes life more simpler, and for startups, that whatever is the startup period, all that losses during that period can be carried forward without the condition of 51% shareholding being satisfied. I am mindful of the clock, so I am maybe rushing a bit. But yeah, if you have any questions, please feel to share your questions, and then we will take it up in them. So there are a number of other proposals. Some of these proposals impact a very specific category of taxpayers. So we have not really covered those, like charitable institutions. There are a number of amendments which is there for charitable institutions, more in the nature of rationalization, because some of the amendments which were made in the past created a lot of complexities, or some of the amendments were created which were made in the act did not have an enabling mechanism for them to get implemented. So those amendments are also there. To take a simple example of time extensions in the faceless scheme, so those powers were not there with the government to do time extension in the faceless schemes. Whereas under the act, if some amendments have happened on the time extensions, the similar thing should be there under the faceless scheme also. So those powers have been now been given. So a lot of these provisions, amendments are there basically to correct the defects of the past amendments, uh, and also where government could seize a potential litigation coming up. So to plug those loopholes, those amendments are there. Starting with what are the other proposals, gift city. This is again the current government's favorite. Every year you see some amendment for gift cities. So again, this year there is some amendment on gift cities. The period for relocation of funds from other places to the gift city without paying any taxes has been increased from, it was expiring on 31st March 2023. Now from 31st March 2023, it's extended up to 2025. Conversion of physical gold to electronic gold and vice versa should not be treated as transfer for capital gains tax. It's a kind of very well understood concept. Like, it's, if you have shares in physical form and then you convert into demat form, should not be considered as a transfer. But yeah, it's better to get it clarified. Otherwise, there could be litigation. So that the government has said here. Their direction for preliminary expenditure, there were some conditions that whatever activities that has to be approved by the board, those conditions have been removed. Uh, on the appeals which are pending before CIT appeals, now there's a good amendment. There was this concept of joint commissioner of income tax appeals way back in 2020. It was removed. 2000 it was removed from the act. Now that kind of has been reintroduced. This authority now will take up small appeals, because there is a huge backlog of cases at CIT appeals. So, and 100, that's the number of JCITs which the finance minister has mentioned will be created for taking up small appeals. Then assessing officer can refer cases for requiring inventory valuation to cost accountant. So this is again a very good thing, because inventory valuation is somewhere, some place where the tax officers may not have expertise, and there has been a lot of planning done by taxpayers also by playing with the inventory valuation, maybe sometimes FIFO, sometimes some other method, weighted average method. So now the assessing officer can refer cases for to the inventory, to cost accountants for valuing the inventory. Refund due to SSC shall be set off against existing demand and to be withheld pending open assessments. This again is a very, very important change. I think the government wants to safeguard what all taxes it gets. So if there is any demand due against from the taxpayer, then that will be set off if any refund is to be given to the taxpayer. And if there are some pending assessments, it will be withheld. It will not be given. Though you may get the order, you may not get the refund until all the assessments are closed. Now, this could be dangerous because a lot of cases there are issues under appeal, and the taxpayers are litigating those appeals. So now, if there are any refunds subsequently due, the tax authorities may try to adjust those refunds against those dues which are maybe litigated by the taxpayers. Intangible assets for which no consideration or rights have paid, or no consideration has been paid, will be defined to be taken nil. So this is again the ghost of, I would say, the ghost of B.C. 𝘿𝙚𝙤𝙩𝙤 case, which was delivered way back decades ago, and there are still amendments happening to overcome those situations which will get covered on those, and in that case. So basically, that case said that where there is no machinery provision, there cannot be any capital gains tax. So the machinery provision also should be provided in addition to the charging provision. So wherever the mechanism to compute the capital gain is not clear, those may get scot-free. So to cover those things, this amendment has been made. Income from market-linked debentures, that will be taxed now as short-term capital gains at applicable rates. So no special rates, because these were being offered to tax by taxpayers under Section 111A at a lower rate, 15% or 10%. Now it will get taxed as short-term capital gains only at the normal rates. Now, some amendments on transfer pricing also. The time limit for submitting the transfer pricing documentation. Previously, it was 30 days plus 30 days extension with the request to the officer. Now it has been reduced 10 plus 30 days. So the logic given is that many times it is referred to very close to the timelines of closing the assessment. So if 30 days time is given, then there may not be much time left to do the assessment. So it has been reduced from 10 days, because anyways, the taxpayers file a form TP certificate which certifies that the company had the documentation at the time of filing the return itself. Similarly, the last amendment which I mentioned in this slide is limitation period for deduction under Section 94B, which is this 30% of EBITDA only is allowed to be deducted as interest on related party loans. That was not applicable to banking and insurance companies. Now it has been extended to notified NBFCs also. So that was my last point. But just to say that there have been 122 amendments. Again, not all of them be covered. We have tried to cover most the important ones on this thing. A couple of one, if I have to mention, for SEZs, there is this some amendments which put conditions on timely filing of returns to claim tax holiday. Also, the export receipts have to be bought within 6 months or the time extended by the competent authorities, that is RBI. So that's there on SEZs. There has been penalty for intermediaries now if they furnish inaccurate information, and the penalty is not much, it's 5,000, but the government is now penalizing the intermediaries, and it is also stated the intermediaries can recover this penalty from the taxpayer. Penal provision, so one relief amendment on TDS, I think, which I missed, was this TDS under 206-AA, which is for non-filers. That is, relief has been given to non-filers who are not required to file the return of income. So if someone doesn't having return of income, and for that doesn't having taxable income and is not filing the return of income, then he need not get TDS at a higher rate just because he's a non-filer. Yeah. So with this, I would end my presentation, and we'll be happy to take any questions that are there. Vineet, I'm not able to see the questions, but yeah, Swati, you can let me know.
Yeah, thank you, Pankaj. Thanks for giving the complete insight and overview on direct tax proposal. So I would like everyone to please put the questions on the comments, so we can take up the questions. Our experts are here and they will provide you the exact answer to the same. So yeah, please, you can put your questions in the comments, please. Okay, so I think we don't have any questions as of now, but yeah, please reach out to us at sailotech.com, and also our email ID is marcom@sailotech.com. Plus, for reaching to our experts, please contact Darda advisors for the same. So thank you all of you for the joining the event, and the budget session was completely knowledgeable to all of us. Thank you, sir, for joining. Thank you, everyone.
Thanks. Thanks, Pankaj. Thank you.
Yeah, thank you everyone. Have a good day.
Have a good day. Thank you.